Few notable events of reversal in the market today. Bonds rallying big, dollar down sizably. You might notice a little red in the crypto world. Bitcoin's down closer to 95 than 100, and MicroStrategy getting hit as well. We're going to talk about the structure of some of the financial engineering behind that stock, how Bitcoin fits into the strategy overall for investors. Joining me, Andy Constan is the CEO and CIO at Damp Spring Advisors. He's got a big Twitter following. It's the first time here on the network. Andy, thanks so much for joining us this afternoon.
Thanks for having me, Oliver.
You did a really good thread kind of breaking down the value proposition of what Saylor's doing from a trader's perspective. Start kind of, though, introducing us. You've got your trading business, you've got the Twitter feed, but your background also is kind of geared towards some of this complex bond stuff, right?
Yeah, sure. So I spent 18 years at Solomon Brothers, which is an old big firm that focused on bonds.
Sure.
I was a
Mike Bloomberg's
I was a
original firm,
exactly.
too.
Yep, he left before I started, but yep. So I spent half of that time running the convertible bond effort, and then moved to run the global equity derivatives effort. So I've been involved in sort of interesting structures like that for a long time, and then went off and started my own hedge fund. And then after 5 or so years of that, decided to focus on macro, went to work at Bridgewater Associates, worked there for about 4 years, and then moved over to Brevin Howard for another 4 years and now I'm doing Damp Spring, which is a macro research and strategy company.
There's a pretty beast resume, some big ones on there. Andy, how do you think today in your strategy about crypto, about Bitcoin? Because, of course, anytime there's MicroStrategy, there's Bitcoin, you're going to get a bunch of viewers, and there's going to, people are going to be very, very aggressive. So first set me the stage on kind of zero the scale for the way you think about Bitcoin before all this MicroStrategy stuff.
Yeah, I'm mostly here for that second part. My experience in Bitcoin is relatively light. I do think about Bitcoin as a allocation to a hard money portion of one's portfolio. I don't happen to have any, but I do have a hefty allocation in my hard money allocation to gold, and think of it. Bitcoin is very similar. I don't have any problem with it. I'd think a 20% allocation in that hard money bucket, like a 2% of your total allocation, isn't an awful idea. I'm interested on a pullback, but I haven't been buying Bitcoin into this most recent rally.
All right, so bottom line is you're a reasonable guy. Okay, so take me through the way they're using these financing tools, both through stock issuance and in the convertible bond as well, because the way you break it down I thought was really good on your thread, which is essentially, look, there is sort of like an option type of functionality to this convertible that does require the stock to go up a lot, basically 55%. But there's also, of course, the kind of zero coupon nature of the bond, which some people go, okay, well, why do I want that? But obviously, that's a very real instrument that provides some value.
Yeah, I mean, I think the first thing you have to do is start out with, there are many ways you can buy crypto and Bitcoin in particular, and Michael Saylor's company, MicroStrategy, is one of them. You can put stuff in cold storage on-chain wallets. You can use a crypto exchange. You can use ETFs. You can use futures. Master offers stock and convertible bonds as claims on its Bitcoin asset. And so that's what you can buy. And a lot of people seem to want to buy Master as a MSTR as a levered Bitcoin investment. The problem is it's fairly expensive relative to all of those others in terms of its trading value, as it trades about 2.5 times the value of its assets. And so what Michael Saylor's doing is, I think, the only responsible thing when you can raise new proceeds at 2.5 times the value of your assets. You're supposed to do that as many times as you can, regardless of whether you then invest it in cash or in Bitcoin. He happens to buy Bitcoin. So he's in the issuance business, and what he's issued is what markets want, and that's this convertible bond. Okay. And so a convertible bond is really a discount certificate corporate bond that pays no interest. And so no one would buy a corporate bond with no interest. They would need to buy it at less than its maturity value of $100. So maybe they pay 60 for that. But MicroStrategy wants to sell it at 100. So what they do is they essentially staple a call. In this case, I think it was struck at $672 per share.
Okay.
That lasts for 5 years, and that the market decided was worth 40. And that's a totally reasonable price for the convertible bond.
Because you can see that by just looking at the options chain, right, to get a comparison?
Yeah, I mean, if you look, the options chain only goes out to Jan 27, but if you look at a similar strike option, that's worth about $200, which when you use the right math, is about 30 bond points worth.
Okay.
And you get a whole 2.5 more than that. You get 2 years, 9 months more than that when you buy the convert. So that thing could easily be worth 40 points. And so the convert looks like good value if master shares are good value and a $60 zero coupon bond that matures at 100, which pays, I don't know, roughly 10% returns over 4 or 5 years, is good value. And so the convertible market thinks it's good value, and so they bought it. Many of them hedge it, and to hedge it, they need to hedge that call. And a long call is hedged with short stock. And so a fair amount of the value that the convertible bond arbitrage community does, and this was my business for most of my career, was short the stock and be long this option.
Okay.
And that's allowed Michael Saylor to sell a significant amount of proceeds. The convertible bond arb likes it, and he's counting on being able to short the stock to shareholders who seem to want to pay 2.5 times the value of the assets for the shares.
Okay, so Andy, price action wise, does any of that hedging by those who own the convert, would that be applying any pressure to the shares right now, or is that just kind of nature when there's also stock sales going on?
Well, it usually happens relatively simultaneously, that the deal gets done at the same time as the shorts occur. And so, no, I think that's probably in the past when the deal actually got priced a few days ago. So I don't think that's putting any pressure on it at all at this stage.
Okay, and you mentioned in there that it obviously makes most sense if the pricing of the equity is correct, if there's value in the equity. So how much of this, though, does kind of open the Pandora's box of the stock being able to rise tied to Bitcoin's price with Saylor's break-even moving up as he's piling in at these really, really high levels?
Yeah, I mean, the company uses its cash to buy Bitcoin, and so obviously it's liabilities, its shareholder equity and its convertible bonds go up if the value of the assets go up. But with that premium of 2.5 times, there's going to be a headwind as Michael Saylor should be and really is in the business of issuing stock and convertible bonds. What he uses the proceeds in is almost irrelevant. It happens to be Bitcoin. But anybody that can get 2.5 times multiple for the assets of his company should be in the business of doing that. And so the selling of liabilities, combination of equity and convertible bonds, and the buying of Bitcoin should over time cause that premium to converge to close to zero. And so Michael should keep doing that, and I think that's his intent.
How much clarity do we have on what needs to happen for the underlying price of BTC? The more he becomes an owner of this, how long can he continue this trade? And then when the trade, whether if there's a limitation for Bitcoins, and then also like, it doesn't seem like he has much intent of like closing out that trade. He wants to hold them forever. So like, is there sustainability to this, or does it fall on its own weight eventually if he either runs out of supply or if he has to hold on to what he's got?
You know, if Bitcoin goes up and Master follows it up at that 2.5x premium,
yep, then we're golden.
He can do this endlessly, but the issuance itself is going to cause the premium to go down. And I could imagine a world in which the premium falls so much that it goes to a discount. And if it were to go to a discount, his business should be buying shares back with proceeds from selling Bitcoin. Now, that may be heresy for most of your viewers, but if I were in Michael Saylor's shoes and I saw the thing at a discount, I'd sell some Bitcoin and buy the shares back and just keep doing that premium harvesting.
Well, that's where it gets interesting, because he doesn't seem like he would ever be at the point where he wants to sell Bitcoin. And the question is, does he kind of back himself into a corner in any way? What is the risk for him tactically on this trade?
Well, I mean, I think the big risk, and it's way, way out of the money right now, is MicroStrategy has now, what, $7-8 billion of these zero coupon bonds that are going to mature over the next few years. And the market cap of the equity is 80 billion, and the value of the Bitcoin, last I looked around 36 billion. To the extent that 36 billion were to fall below 7 billion, that's when he would have to sell Bitcoin to pay off his debt if he couldn't do new financing.
Okay.
And so that's the really far out of the money risk to the strategy. But again, it would require Bitcoin to fall, what did I say, from 36 to 7. That would be a 75% drawdown before there's any real tail risk of that nature. Now, Bitcoin could fall 75%. It has in the past, but that's not my call. I think the call here is, if you want to invest in Bitcoin, Master is not the way, because it's the most expensive. The converts are actually fair, but not only if you're short the stock. And there are many other ways to buy a levered bet in Bitcoin that are far less expensive. And so I think the risk to Master stock is entirely in this premium.
Okay. Andy, one other point, to your point about kind of the nominal level at which Bitcoin would have to fall to really stress the trade for Saylor. What about the rate of change in the speed? So let's say there's a fast collapse. Maybe it's not as nominally as big as what you're describing, but then that would totally erode, or at least to a great degree, kind of erode the option element of the coupon bond. Would that apply any kind of reversal trade if there were a speed fast enough to which, like, okay, this is going way out of the money now to the, that 672 strike or whatever?
Right. So Michael's doing something that should stabilize the price of his stock. By issuing 7 billion now of convertible notes, he's got somebody on the other side of that trade who, when the stock rallies, they sell it to increase their hedge. And when the stock falls, they buy it to decrease their hedge. And so that's what we call positive gamma. And the convertible ARBs are loaded up with that. So it should dampen the volatility of Master stock because of the existence of these convertibles and the fact that they're hedged by convertible bond arbitrageurs. So I think it'll dampen the speed of declines on Master. Now, that doesn't mean it'll dampen the speed of declines on Bitcoin, because the option is on Master stock, not on Bitcoin. And so you could see a dampening in volatility on the Master stock, even though Bitcoin is moving along.
All right. Hey, Andy, just real quick, and I guess this one's kind of more from your gut, from a trader perspective and your history in markets. When you see how much he owns now and his portion of Bitcoin going up at higher average prices, when the supply obviously is limited and going down, do you think there's a tail wagging the dog situation where if MicroStrategy comes under pressure, it could move Bitcoin price up? Is it now like a major catalyst itself?
I don't see him as a seller, and I don't see him as a forced seller. So I don't think he's necessarily going to cause it to go down faster than it otherwise would. And I don't think he's, listen, I don't know. Is 386,000 coins a lot of coins relative to the total amount of coins outstanding? Yes. Does he have some concern if he owns a lot more? Yes. But like the U.S. debt, it's probably a long way away from those sort of concerns.
All right. Appreciate the math. Appreciate the logic. Thanks, Andy.